Hey guys, all in crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I'm hoping you've all had a wonderful Wednesday so far. It is currently the morning where I am, so good morning to you, afternoon or evening, depending on where you are. It is the 25th of the 1st, 2023, and this is going to be your daily cryptocurrency market update. We're going to be looking at Bitcoin. We're going to be looking on a more of a short-term horizon. We've done a number of things this month. Well, we've done lots of things this month where we've tried to kind of come up with our forecast for Bitcoin, which is essentially just a barometer for the entire crypto space. And we are now of the opinion. I have a bullish outlook over the next 3 months, certainly at least until May, potentially 3 to 6 months. I do think there's trouble coming in terms of what the yield curve's inverting. But that usually doesn't play out until the yield curve is uninverted. We've looked at all this. We're going to be looking at a number of other things. We're going to be looking at the VIX, which is the volatility index for the S&P 500. We're going to be looking at the high yield index, okay, the ICE BOFA high yield index, because there's correlations with this and markets. When it's at a high point, markets are usually at a low point, and vice versa. And this looks like it might be making its way back down. Along with the VIX, there's a number of things that we want to look at. We don't just want one reason why we're buying, and what we try and do, or why we bought at the start of the month. What we try and do is give you guys sound reasoning so that if you do off your own back decide to make a decision and put money back into the crypto space, when the market is shaky, when it's having a pullback, let's say you bought and it's pulled back, you have a lot more confidence in what it is and why you've bought. The people that get very emotional in terms of their investment are people that are just blindly, kind of like a roulette machine, put it on black and you're kind of hoping that it lands on black and you get that double payout. So we will be doing quite a bit technically. I will break it all down and explain it all to you. This is alpha here, guys, because you guys are not only learning about the cryptocurrency market and my thoughts on where I think it's going, but you're also learning about charts and how to sort of assess things from different angles. We do the basics, which is just charting every day. But I want to start things off with a little bit about what's going on at the moment. So we had Australian inflation, which is looking like it's peaked. This is the consensus. This is kind of what we've speculated, why we think the Fed, we already knew the Fed didn't have too much left in the tank based on the 2-year US government yields. But essentially, it's looking like inflation is coming down across the board. And inflation is the main fight. It's the reason why tight monetary policy has been put in place in the first place and has tried to bring demand back in line with supply, so on and so forth. We've gone over this. But we actually have earnings. It's a big earnings. This week, we've got about 20% of the entire S&P. It's Wednesday today. We've got A, T, and T. We've got things like Tesla in terms of earnings. So it's going to be an interesting day. The futures market for the US, the NASDAQ 100 or the US 100 CFD, the NASDAQ 100 and the E-minis for the S&P are all in the red. And it's probably because of where we left off. And actually, if we look at the S&P, and we've done this, it's natural that people will take that short. In the same way, it's natural. This is the scenario forecast that we drew out for Bitcoin. We've been expecting a pullback, guys. We expected a deeper pullback here. We got more of a shallow one. We're kind of expecting one here. But actually, when I woke up this morning and I looked on Twitter, I wanted to throw up as always, because it's just virtue signaling, boasting, people who actually... Anyway, I don't want to be too negative on the kind of caliber of big crypto Twitter accounts and sort of market accounts. But I woke up and everyone's looking at this pullback now. And actually, from a trading point of view, it makes sense to short here, right? You don't really want to long here. It's done a really nice run. Everyone's sort of expecting this pullback. I think what's likely to happen is it's going to get sent. So even though we want this and we'd love a pullback, and it's still very much on the cards and seems like the likely scenario, when I see everyone's thumbnail saying crash, this, distribution, whatever, I'm like, send it, man. The market is going to lean towards pain. And actually, this rally, people are getting really caught out on this. And actually, we bought for the first time. We did a video on the 5th. It's all public. at this point. This rally is probably one of the most hated rallies that I've came across because people are still waiting for that 10K, 12K Bitcoin. Maybe we get it. Even though we bought and we took a position, we're not necessarily saying that the generational low of all lows is in, but we're saying we see value and we've put our chips back on the table, having mitigated a lot of last year's damage. So we are going to cover that. I would like it to get sent, and I do think actually there's a good chance of that given everyone's sentiment right now. This was interesting. So this is obviously weighing on the stock market. JPmorgan have had a very negative approach, or recently been very negative on the crypto space. However, they've also, Jamie Dimon's also been somewhat positive given what his outlook on things were last year. Used words, and we covered it all like hurricane. He's now somewhat flipped and saying maybe a soft landing is a lot more likely, along with Paul Kruger. And so on and so forth, or Krugman. This was another JPmorgan analyzer, outright negative on stocks. So maybe he's got a point on stocks here. JPmorgan's Marko Kolanovic braces for correction and hard landing. There's always going to be one. JPmorgan's Marko is abstaining from the early 2023 rally. Instead, the institutional investor Hall of Famer is bracing for a 10% or more correction in the first half of this year, telling investors he's outright negative on the market. Fundamentals are deteriorating and the market has been moving up. So that has a clash at some point. I do agree with that, actually. The firm's chief market strategist and global research CEO told CNBC Fast Money on Tuesday. Kolanovic slashes his firm's exposure to stocks last week to underweight. In a recent note, he warned the market is not currently pricing in a recession. His base case is for a hard landing. Short-term interest rates moved a lot in the last 6 months. They'll probably still go higher and stay there. He said the consumer took a lot of debt. Interest rates went up. The consumer was resilient, and that was the sort of our thesis last year. But as time progresses, they're less and less resilient. So decay in terms of consumers, I think, is very likely. Interest rates affect consumers. High inflation affects consumers. Their funds, there's been more wealth taken off the table over the past year than there ever has been in history. But of course, we live in a far more inflated system. And yeah, I think there is a continuous drag on consumers. But what you've also got to remember is a lot of that drag has already been priced in. Where interest rates, in my opinion, are going to go has already been priced in. And you get to a point, if markets are forward-looking, when do you start to allocate for the future? Okay, we priced in pretty doom and gloom scenarios. And actually the market's reacted accordingly. Now, the S&P potentially hasn't. But actually, if we look at the S&P and we use something like the high-yield index, it could show that things are going to get better. But this is just some thoughts. So I found this very interesting. I always like to listen to the JPmorgan analyzers. He's kind of on the side of everyone. And we actually we're not ignorant to what's going on. We're just not as doom and gloom as perhaps some people. And from the stock market's point of view, if you look at the S&P, it's not a hard call to make that you're right into this resistance. Maybe you get a sell-off. He's not saying anything that's like, it's technically warranted, right? My thought is, in the same way that the cryptocurrency market is, and this rejection's been a lot less severe, in the same way that the cryptocurrency market, people are looking at this and going, it's a definite short. We think this has got all the opportunity. And if this does do, so if we get this, fine, we're happy to buy more at these lower levels. But if we do get this, you're going to have a lot of people that are wishing they had bought here, of course here, anywhere along here, and they're going to literally be waiting for a pullback forever. And before you know it, we might be at something like 30K. Kind of what I'm envisioning. You don't want to be that guy on the sidelines, in my opinion. However, always do your own due diligence before you invest. I can't help but feel like this market is going to lean towards pain. When everyone's calling for a pullback, it's going to do the exact opposite. It's already shown you that thus far. We were waiting for more of a pullback here. We got the pullback, but not to sort of the low 20K range. 19K is what I was actually waiting for, something around about this mark, and we got nowhere near it. So it's going to be very, very interesting, guys. This is the VIX. This is the stock market making big moves. So we had Microsoft did actually quite well on their earnings. All very surprising given the year that we've had, right? It's the same with inflation. It's the same with economic data. It all seems to be surprisingly becoming significantly better, and it doesn't make sense when you look at a lot of these models. And I think the reason that it doesn't make sense is because we have come out of almost 2 years of lockdowns, right, where the economy was nil. Okay, that reopening is kind of delayed and lagging. So why I think we're continuing to see strong, although there is arguments that they aren't quite revealing the whole truth, labour statistics and so on and so forth. But to do a little bit of TA across market, we can get rid of this. I'm going to put the S&P over this, and this is the VIX. So when the VIX is at a high point, the S&P is at a low point. This has been the case, and when it's at a low point, S&P is at a high point. It's at a low point now, so does that mean the S&P is at a high point? Well, you could have literally sold the S&P at any range here, really since the start of the, since start of 2022. However, I want to note that this, given everything that's happened and given the sort of uncertainty and not knowing where things are going and constantly repricing it, is at a very elevated level to certainly prior or levels down here. So the S&P, so the volatility index, let me minimize my face a little bit more, could end up coming back down to these levels. And that would see a further rally, and then maybe you get something like that. Maybe we're looking at something like this. And then we get that, taking us back to these levels crash that the yield curve is predicting based on something, horrific taking place. Who knows? Or maybe it makes a new low. But there's room for the VIX to come down, in my opinion. It's already put a toe below these prior levels. This is the ICEBOFA US High Yield Index. Option adjustment spread. So this is high yield spreads for all intents and purposes. And this is the S&P. Correlation here is to be seen. Okay, I kind of want this a bit more room here so I can show you what I'm talking about. Let's do daily. Let's do it. That's even worse, isn't it? Let's go back to weekly. Okay, so this at a high point, markets at low points, right? So you got your 2008. Maybe it's been at a high point. This is acting weird, right? Because usually the high point totally predicts the market bottom. So lots of data out there just ain't making sense. So it's got this as the low point. What happens if this comes down like this? Well, you can see what happens when this is trending down. Markets go up, right? Trending down, trending down. So maybe this comes back down to these levels here. Or there is also the possibility that it does something like that, and this is on the back of whatever the yield curve is predicting. Very interesting stuff, but this is just a few more things that make me think, actually, markets are going to do quite well over the next sort of couple of months. Remember, we did Bitcoin against gold, we did Bitcoin against the S&P, the NASDAQ, and also Bitcoin against the US dollar, all saying a similar thing. We're going to stay on the side of having a moderately bullish outlook for the next 3 to 6 months. And on that note, guys, I'm going to love and leave you. If you've enjoyed this content, like is always greatly appreciated. So is a comment, and I'll catch you all in the next YouTube video. Thanks a lot for watching, ladies and gents.